Welcome to the podcast series Talking Success, connecting the global FinTech community. I'm Stacey Jafta, and today I'll be chatting with Paul Kent, CEO and co-founder of Adumo. Adumo is the largest independent payments and fast-growing merchant acquiring solutions platform in South Africa, with a presence in 7 African countries. Hi, Paul. How's your day going?
Yeah, it's all good. Thank you. And thanks for having me on the show.
Of course, I'm excited to have you. How's the last couple of months and weeks been?
Well, the last few weeks have been quite nice. We're starting to travel a little bit, and I made the most of that to get a few days break. I think these last few months in particular have been exceptionally intense for not just for me, but people all around the world. So it's there's definitely a need to get some downtime and recuperate and relax.
Awesome. Where did you go?
I had a beautiful time in the Eastern Cape. In terms of beaches in South Africa or beaches around the world, I don't think you can get any place better. So there's a little place called Mgazi River Bungalows, just about an hour and a half's drive from Umtata. And they've got kilometers of beach where you're kind of the only family on the beach. It's incredible.
It sounds beautiful. And the weather right now is warming up, so I can only imagine how beautiful it was.
Yeah, for sure. It's summer's arriving in South Africa, especially in Johannesburg. I think we had over 30 degrees this last weekend. So it's here with a vengeance.
I'm ready. Paul, I want to hear your story. Tell me about your journey and essentially what led you to co-found Adumo and then become the CEO.
I think sometimes it's things happen by accident or maybe by you're in the right place at the right time. But I mean, I started off my career many years ago in a Japanese trading company. Okay. And from there ended up at a technology company called HealthBridge that was in the early 2000s. So it's quite a while now from a career point of view. But within that company, it was kind of I think that's where my career started. Before that, I just had jobs and in business development. And, you know, during that time there, the medical aid industry, which is the sector that we were providing technology to, went through drastic changes. And part of that was, you know, the move away from where all your medical benefits were paid to an environment where doctors finally had to start collecting co-payments, collecting payments from their patients. And that kind of gave us an opportunity to start providing card payments or card acceptance points, your card terminals, lots of different words for the same thing, to these doctors. And from there, we founded SureSwipe. Out of a simple idea or a simple need to doctors, we went into SMEs around the country.
And how did then the group of Adumo form from there?
Yeah, so SureSwipe started in 2008, and we grew the business organically during kind of a 10-year period. And getting to the end of that period, we saw a much bigger opportunity within card payments in South Africa. And we looked at having shareholders that had been amazing shareholders at the time. But I think for the next level of growth, we needed shareholders that were looking to put in some capital. We're looking at shareholders that strategically could support us and had knowledge of the industry. So SureSwipe, its founding shareholders or our group shareholder decided to exit. And during that process, we went through quite a competitive process. And during that time, Crossfin and Apis, Crossfin being a local company and Apis being a London private equity firm, were the bidders. And within the bidding process, we looked at, you know, bringing Crossfin's other assets into a group and Apis coming in as a private equity partner, and Adumo was formed.
That's so awesome. There is so much that goes into building a business and especially building a startup. It's hard to do it all well. How do you choose what to keep in-house and then what to outsource?
Yeah, I think that was one of the key things we did at SureSwipe in the early days. We were fortunate that we got a great sponsorship from Capitec Bank at the time. They were entering into the card payments space where historically they'd only been into accounts and lending.
Okay.
So they were looking for a distribution partner. We had a lot of doctors and medical practitioners on the books at HealthBridge. So we had a little bit of a kickstart, and we looked at, when we built the business or founded the business, we looked at what are the things that we do well and what are the things that can be outsourced because others do it better. There's a massive capital requirement to do it yourself.
Yeah.
And we built our business around a sales organization. So initially we had, I think it was 10 salespeople. We had a couple of administration people in the background, and we built a small team on focusing on sales. And as we moved and built the business, we started to insource lots of the functions. Initially, all of our on-site support technicians were outsourced. Our call center was even outsourced at one stage. But very quickly we decided that the brand and the client interaction as part of the sales organization were the critical components in our key competencies. So we started bringing all of those things in-house. But still, for many years, technology was outsourced. And to this day, we still have some technology partners that do some of our processing. So we went with a model of low CapEx, variable cost model. And in that environment where you're really looking at a variable cost model, outsourcing is very friendly and a very friendly option.
Why do you think that being client-centric was so successful? And then what tips would you have for those wanting to build on their current client relationships?
I think client centricity it's a bit of a buzzword. It's been around for a long time.
Yeah.
But certainly it's, being client centric, or even more really understanding your clients or understanding your customers becomes very important in how you communicate to them, how you service them, how you support them, how you go out and sell product to them, having a real understanding. And there's a lot of empathy that comes with that. We started a payments business with people that had sales experience, myself included. My background's business development, account management, kind of sales, and a very, very little knowledge, although I've got a technology background, so I've been involved in technology, but no one in our company for many years actually had any financial services background, had any banking background. But we did have an understanding of retail. My personal story is as a youngster, I grew up in my grandfather's store in England. As a teenager and early 20s, I worked part-time in a retail store. So just that little bit of interaction in those small retail environments, I think, gave us a lot of insights and a lot of empathy with our customers. So, that was a great foundation to build things around.
I'm sure you get asked this all the time as SureSwipe grew their customer base at such a rapid pace and you've built relationships that have lasted when SureSwipe was only but a name and you were growing from the ground up. How did you build your customer base at such an exponential rate?
I think we were in a market that was ripe for some disruption. I think the way we did things then is very different to how things are done now. But the one thing we try to do is almost don't force your methods on your customers. When you look into how you communicate, how you service, how you talk to customers, there's lots and lots of channels. And I think what we try and provide today is provide the channel that your customer wants, not the channel that is the most favorable to you as a business. And I look at many businesses out there, some of the bigger brands these days with their WhatsApp channel, their WhatsApp communication, or their call center channels where you can't speak to a person. Yeah, it's crazy. Recently we had an interaction with and I won't say the name, but it was one of the mobile operators. And the only way we could communicate to them was either through a WhatsApp channel, and we were getting messages back, responses at 4:00 in the morning. And then at 9:00 when you see your WhatsApp, it's like, well, you didn't answer the call, so now we've had to hang up on you. Wow. It's crazy that we're forcing channels on customers when some of them want that, of course. but still lots of people want that personal interaction. Lots of people want to speak to somebody when they phone your call center. So I think we have to have a multi-layer approach.
And really finding out what your customer wants. I think that ultimately is needed.
Yeah, for sure. The early customer base that we had, which is in 10 years ago, is SMEs in general and retailers in general across the country, was quite kind of white middle-aged retailers. So we really had to think about how do they want to communicate. And a lot of that at that stage was still a personal interaction, particularly those customers that already had a store. They weren't accepting payments for the first time. They just had a bad experience with the bank.
This is a massive topic in the fintech space. How far is too far when digitizing a bank? Personally, if I can do everything on an app or online, I'm going to opt for that. But then you have the other side of the spectrum where you want to see the person that's handling your money. You want to have that human interaction. And I guess you have to find where that happy medium is. Find out what do your customers want. And is it feasible to do both?
Yeah, I think there's an element of trust that you have to build. And I'm not sure that there's enough trust in not having the option or not having a fallback to speaking to a person. I mean, many websites these days, they don't even have a phone number. You can't contact them. So I'm just not sure as a broad society. Certainly there's pockets of society that's accepting that, but as a broader society, I think there's an element of trust and that when when things really hit the fan, there's somebody to speak to.
You didn't come from a financial background, but rather have experience in retail, as you mentioned. As the business grew, how did you increase your exposure and development?
Yeah, I think it's, when you start in a business, there's a lot of passion that goes into it. There's a lot of late nights, there's a lot of time, and the founders are, integral to the business. The business is built around a founder. And the risk that we have when you have success, or the risk a founder has when a business is successful, is that the business will outgrow the founder. Or even worse, the founder will be the reason that the business doesn't grow. So they can hinder growth. And for me, in those early days, it was, we were growing 100%, 150% per annum. And looking back, I still don't think we were aggressive enough. It's probably one of the things I look back on and think we should have been and could have been more aggressive at the time. But certainly when a business is growing rapidly like that, you have to keep pace and make sure as a founder, as the leader of the business, that you're not holding it back. And I was quite conscious to this. And in that regard, I continued studying. As a founder and MD of a business, I still went and I did a master's, I did an MBA to make sure that I'm keeping abreast with, practices, thinking about modeling the business, thinking about how to grow and expand the business, and making sure that I wasn't the hindrance.
You mentioned that you never took as much risk as maybe you should have. What types of risk do you wish you took? Or how could you have been more aggressive?
Yeah, I think we scaled the business well. But in hindsight, I think the opportunity was much bigger than we imagined. So, if I look back into those first kind of 5 years of business, competition was very, very low. Our model, our business offering to the SME market was way better than the incumbent banks. Our servicing was way better than what they could offer. They've kind of caught up now, and we now operate in a very commoditized, highly competitive market. And in those first 5 years, I think we could have scaled quicker. I think we were building a large sales team of 20, 30 people. I think we could have had 50, 60. Those days, digital channels still weren't as common, and certainly in the banking world and in financial services, they weren't available as they are now. But yeah, we could have scaled it a lot better, been a lot more aggressive in our sales approach and in our building the organization. I think we weren't pushed enough. I think I didn't push enough. And when you're growing at 100, 150% year on year, you think it's a lot.
Yeah.
And it is a lot for most businesses. But based on that opportunity, I think we should have been more aggressive.
Could you give an example of how you could have been more aggressive?
So we had good success in some of the outlying areas in the early days because those smaller towns, smaller cities were ignored by the banks. And we could have built out bigger sales organizations. We could have perhaps had some, what we call satellite offices in those areas. Our sales teams could have been bigger. So yeah, I just think from a distribution point of view, we limited ourselves.
Yeah. Gotcha. This is something that I'm personally so excited to hear more about. You're in the midst of acquiring 2 businesses, one being a startup. Tell me more about the process. How do you go about choosing who you'd like to acquire? What are those next steps?
Yes, I think we're in a fortunate position that as a business within the group of Adumo, we've got SureSwipe, we've got Innovation, Pan-African Payments, and we've got iKhokha. So we've got 3 really strong brands with card payment solutions that really look at your entrepreneur informal market, your traditional SMEs, up to kind of tier 1, tier 2 retailers. So we're in a very fortunate position to be able to offer solutions to basically the whole South African retail market. So when we look at acquisitions, we look at 2 things. One, is it going to assist us in differentiating our product and our product offering? And the second one, is it going to give us additional scale or access to customer base that we don't currently provide services to? So those are the 2 kind of two of the criteria that we look at. Of course, there's many other facets to it around, the technology, the people, in particular, the leadership team that's at those businesses. But in terms of a strategic fit, it's got to either differentiate or increase our market share. So that's kind of the primary criteria. And then we're fortunate, there's a lot of startups in South Africa. There's some great technology, there's some great products going out there, and we're in the process of finalizing a majority stake in one of such startup. A small team, they're even pre-revenue, but we believe that they're going to give us a real differentiated product offering into the market, in particular for those, I'm going to say, the slightly tier 3, tier 2, tier 1 merchants. And then the next acquisition, and everything happens at once. So we're in the midst of many things, but the next one does increase our market share or give us access to potential customers that we can provide additional services to that customer base. So access to the market is something that we're quite excited about. So we don't just look at the value of the company as a standalone, but we can see what value can we bring in terms of the Adumo businesses.
Paul, this is all so exciting. I'm just so eager to see what's in store for Adumo. Thanks so much for being on this podcast. I really loved getting to chat with you. Where's the best place for listeners to reach you and find you?
So I think through LinkedIn is probably the best place to connect. I'm not a massive follower or provider on other social media channels. So I think at this stage through LinkedIn. Our website for Adumo and our Facebook platforms are still in progress. So LinkedIn for now.
Awesome. Thanks so much, Paul.
Thank you very much. It's been a pleasure.
Thank you for listening to this week's episode of Talking Success, Connecting the Global FinTech Community. Feel free to follow us on LinkedIn at Talent in the Cloud. And if you're interested in exec talent, expanding your team, or you yourself are looking for a new, exciting change in your career, check out our website, talentinthecloud.io.